Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of August the 15th, 2016. Now our major event risk this coming week is the FOMC minutes, but other than that it should be a relatively quiet week in thin illiquid summer trade. So with that said, let's get going here with the US dollar index. Now we're going to change things up a little bit this week. Now, what I like to do is bring in, when I talk about major event risk in 2016, clearly that's been the Brexit vote, and the markets, in my respectful opinion, are still reacting to that. Now, what we're looking at here with the dollar index, we can see our swing highs here coming off of that Brexit vote and what that did to the dollar index. We had a triple EMA cross on the VantagePoint software shortly after, or during that Brexit vote actually. It was actually a couple of days before that actually even happened. We then proceeded to move back up basically right to the top of this after a short sell-off. We're now turning lower back inside this range yet again. Now our key VantagePoint level for this week is 96.06, the 18-day predicted moving average. We can see that the dollar started the week very good, but it finished the week basically hovering right around the VantagePoint key level. Now, not a great retail sales number out of the US on Friday, so that's not likely to boost the dollar buying that much, but in most cases leading into an FOMC minutes, it's all about the rate hikes here, guys, and essentially I think we're going to see a buy the rumors, sell the fact here. When we go in, the buyers will come in buying the US dollar, hoping that basically the Fed is going to be a little more hawkish on rate hikes, and for that reason I think the dollar will remain firm until Tuesday, Wednesday. Then it's anybody's guess what could happen depending on what that Fed is in their statement in the minutes. So when I look at this right now, we can see that our dollar index, or our neural index is rising higher, but the position of the predicted MACD is not in the best possible location that it could be. Our predicted RSI coming in at 46.2, again giving a slight bearish tone, and the fact that we're below this key VantagePoint level, the 18-day predicted moving average. Very important that we look at all this, but the main thing I want to bring in, bringing in this bar instead of drawing in my standard trend lines, which I usually do for everybody, this Brexit day is still very important. It's still coming back to haunt us in a lot of ways. You'll notice that as the market turned lower, the dollar index, turned lower, we basically came right back up to that swing high. So we're looking for continued momentum above this. Now the dollar index is not really showing that at the current time, but the FOMC minutes very well could change that. Now, when we look at the S&P 500 going into next week, we can assess here that there was actually a significant event that took place here on the S&P 500. So if we take the same bar that I just discussed, and we're going to do this through this entire presentation this week, we can see that basically we had a swing high and a swing low on that day. Then it looked like the equity markets were going to break much lower here. Now, what in turn ended up happening was we came up and we actually broke through that swing high, and the S&P 500 has stayed above this level this entire time. So the S&P 500, I think there's the one thing, the common theme that I hear with everybody is, or I'm constantly asked, is can these equity markets keep going higher? And my answer would probably be like most analysts, that no, I don't really think it can, because it's basically the Fed pumping phony money into the system to keep these equities high. But we can't argue with the fact that the market is still buying, and this is just one more piece of evidence here that confirms that. So is the S&P going to continue to move higher next week? Well, possibly not. If those Fed minutes suggest a rate hike, that should let some steam out of the S&P 500. But we also want to make sure we're looking at the global equity markets. We can assess here the same thing with the DAX. Now, when the DAX, and this has been I've been of this opinion for some time now, that the reason why Euro US cannot break higher is because of its inverse correlation to the DAX. So we can see that basically on that swing high, on that Brexit vote, that was an immediate negative for the DAX 30, but right here, based on that VantagePoint signal and breaking above that swing high, the DAX 30 has not looked back, and the Euro US pair has been trapped under the 112 area for basically the better part of 2 months. So there's a reason why these things happen, guys. They don't just happen for no reason. There's an intermarket correlation that's driving that. Now, out of the global equity markets, the Nikkei 225 is the one that is the suspect here. That could be the trigger for the global equity market sell-off. When we look at the swing high here, we go back and look at that to that June swing high during the Brexit vote. We can see that VantagePoint was already forecasting this to go down. We went considerably lower. We came down, tested this low again, but then we bounced up and we got all tangled up on this Brexit swing high. Now that's exactly where we are right now, guys. We're closing the week at 1670.85, but in order for the global equity markets to continue to push higher, the Nikkei must go higher also. They're all correlated together here is my point. So if the Nikkei fails above this 17,000 mark again, guys, that could be the trigger that sends the global equity markets lower. So look for that potentially to happen. Now with oil has been, again, I've been quite bearish on that in 2016. We see basically off the swing low, off the Brexit, we've had very good follow through from the break of that swing low. Now the idea is that if the market pushed it down this low on this particular bar, we're looking for it to continue to break below that. Oil has taken a pretty big hit just this last couple of weeks, starting to recover here right now. The VantagePoint key 18-day predicted EMA 73.69, but I really do feel it got a bit of a pop here on that that weaker retail sales numbers. So we'll see if the oil can hold on to its gains. But again, very little has changed here on oil, guys. We're still pretty bearish on that. The indicators are starting to turn around to the long side, but I would look for the 48 level, which is that breakout point from that Brexit vote, the day of the Brexit vote, to contain any long trades here. So buying up to the 48 level is reasonable, but I would exit all longs at that particular level. Now, gold is another one. When we look at gold, people are saying how bullish gold is, but when we really look closer at gold, in my respectful opinion, fair value is more down around the 1260, 1280 mark. We've had a big push up here, but this is not on demand for gold. This is based on a flight to safety, on risk after the Brexit. Now we can see that the market shot up high right to this swing high. We came back down, we moved higher up to here, but then we failed all along that former swing high from the Brexit vote. We've been coming sideways along here. You can see we then took a spike up here again based around the Fed, but we failed again off of that swing high for the Brexit vote. So once again, it's a very important level here. And right now, gold is in trouble yet again. The key VantagePoint level, 1339.35. We've closed the week at 1335.80 despite that weaker retail sales numbers. So once again, it does give possibly some fruition here if we would be moving back to that 1260 area. I think that at this particular time that is reasonable. And again, if we take out this bar on gold has been doing pretty decent in 2006. Don't get me wrong, but I think that if we take this bar out of it and we just cross this bar right out of here, that puts gold at about the 1260 mark. And I think that that's at this particular time is more fair value. So I don't anticipate a lot of gains for gold next week. But again, the FOMC minutes is always a wild card. Always is this a wild card, and we have to respect that. Okay. Now, when we move into our major currencies, once again, guys, I'm going to run through all this this presentation so everybody can see how to work in order flow type trades with the VantagePoint software, and basically identifying how to trade the markets after a major event risk. So this is your bar here on the day of the Brexit vote. We've gone all the way from 114, and then we sank all the way down to as low as 109.25. So where does that leave us? It leaves us smack dead in the middle of this range. The key VantagePoint level, 111.09. We've been holding above this level for most of the week here, but we need to hold above 111.09 for this continue to remain bullish. This is a very mixed signals here from VantagePoint. Our predicted MACD is looking good, but our neural index is not. Our predicted differences, they're not looking that great here at all. Our predicted RSI is at 55, but it's not saying we have any momentum in this trade. So once again, guys, a catalyst that we would be looking for Euro US to break higher, we would need the DAX 30 to move lower. We would need the S&P 500 to move lower, even the Nikkei, the CAC 40 to all move lower in order to drive the euro up. So right now, that's a possibility for next week. But again, we are in thin, illiquid summer trade, and there is absolutely no guarantee that they will move in any direction, and we could continue this very tight range. And that tight range right now is basically between the 112.30 and about the 109.80 mark. That's basically right here is what we're dealing with right now. But again, these are your critical areas up here, 114, and again about the 109.25. So if we hear people, talking about different things, remember that in order for Euro US to break higher, or lower, it's going to need some type of catalyst. The FOMC minutes could be that catalyst, and a global sell-off in equities would absolutely be a catalyst that actually weakens the US dollar potentially and strengthens the euro. But watch the key VantagePoint level of 111.09 to start the week. The same thing would apply to US Swiss franc. You can see that once again I've drawn those swing highs in here back from the Brexit vote because I believe that they still are in play, actually, because if we take this bar out, then that puts US Swiss franc about the 97 level. So that doesn't surprise me that the VantagePoint signal is pointing lower on this particular pair. And now it's been pointing lower since basically about Wednesday of this past week. The key VantagePoint level to watch here, 97.91. How are our indicators looking? Well, our neural index looks good. Our predicted short, medium, and long-term differences are very mixed, but our predicted MACD breaking below the zero line and our predicted RSI below the 40 level is saying that we're bearish, but we have no downward momentum to build on at this particular time. So we would look for that RSI to break through 40, and we would look for this market to continue, but be very cautious, guys. Right around this level here, which is around the 96.40 area, we've got pretty solid support. Right now, it looks like we are coming back into that area, but the FOMC minutes once again could send this pair higher very quickly. Now, as we come into the British pound US dollar again, we're going to bring that Brexit into play here because I think it is worthy of a look to help simplify our trading. Now, when I look at this bar, this big move down here, we can see we have actually had a very minor retracement in this area here, but then we immediately broke back below this swing low down around this 133 area, and basically we've been going pretty much sideways here. But then again, a very nice signal from VantagePoint about a week and a half ago, and Great Britain US broke lower, but it's hugging this swing low from the day of the Brexit vote this entire time. So the key level here to watch for next week, 131.17, the VantagePoint 18-day predicted EMA. The indicators here from VantagePoint have remained predominantly bearish. Now, when we look at that predicted RSI here, set up at the 40, the break of the 40 level here, this is an important trigger for me. You can see that with the triple EMA cross is been a leading indicator for this break on this particular pair. So we've had follow through here. We're still moving lower, but we have some very powerful swing lows to deal with around the 127, 128 area, which comes in right here. So watch that area very, very closely. But for now, this pair absolutely remains bearish. Excuse me. Now, when we come into the dollar-yen pair, once again, we always want to check that critical level here. Are we above or below the VantagePoint 18-day predicted EMA? Now, when I talked about this in last week's Forex Weekly Outlook, we came right up to that number, and then we failed miserably. So we basically have done the same thing this week. We're basically just hugging along this VantagePoint 18-day predicted EMA. Those levels come in 102.62, 101.90, and 101.51. Now, the question here is, will the dollar yen continue to break lower? What we need to understand with the dollar yen is that basically this is an equity-based trade here, guys. That's what it is. So when we look at an equity-based trade like this, then what I'm saying is that in order for the dollar yen to continue to move lower, the global equity markets, but more specifically the Nikkei 220, must move lower. So if the Nikkei moves higher, the dollar yen moves higher. So right now, that Nikkei is a very shaky signal. signal. If it continues to advance higher, then the dollar yen will recover off of this swing low from the Brexit down around this 100 level. Now, the indicators here from VantagePoint at this time are not confirming that. We have the long term, the medium term crossing over the long term predicted difference, which suggests that could happen here, okay? But these global equity markets are incredibly overbought, but they do continue to move higher. So, and what's troubling with this is, even though the S&P has moved higher and the Nikkei 225 has recovered to some degree, there has still not been a lot of buyers in the dollar yen past the 103 level. So right now, I think that it's been a very good call from VantagePoint. When we look at this, their short signal here came at basically the end of August, you know, or the end of July, the beginning of August. Very strong signal here, and basically this pair has had very minor retracements, and it's just continued to advance to the downside. So I believe that that is likely to continue, barring anything the Fed. If the Fed becomes overly hawkish here, that could send the dollar yen pair. So once again, be very cautious of those minutes this coming week. Now, those minutes will definitely affect our commodity currency, the US CAD. This pair has struggled here. It's been a difficult trade here. We've recovered a bit in oil. That sent the US CAD lower. A little bit of, I would call, last minute buying on the US CAD. When we look at this, basically, once again, coming back and we see how the market's basically confirming the markets are globally connected, that Brexit vote had a direct effect on the US Canadian pair. So we've had a big move up. We've come back down. We've moved right back up to exactly that level of that swing high. You know, a couple of weeks later, come back down. We've made a clean break again up into this area here above the swing high of 131.50. But then we've come back down and we've got all tangled up in it again right here, and then ultimately breaking lower on a weaker retail sales number, and of course oil prices recovering a bit to the $44 a barrel. Now, when oil begins to fail again, which I believe it will, probably the middle to latter part of next week, then the US CAD will likely rise again. Right now, our indicators are saying that we are going lower, but again, we have to be very cautious. We've seen this before. And August is not usually a great month for oil here, guys. So when I look at this, I'm thinking, okay, we're going to probably have one more little push to the downside, probably down around 128.50, and then we should start considering getting back into this on the long side. Now again, our predicted MACD still above the zero line, and the only real concern I have for longs at this particular time are going to be the position of the predicted RSI. I want it back up above 40. Right now we're at 34.2, and that is actually quite bearish. Usually when we have a break like that, case in point, if we follow this rate up here with a triple EMA cross, we've gone from 131 down to 127. So this looks like we're just repeating a move that we've already seen before. I don't think we're going to get to 127. I think 128 should cap any downside, and again, look for those VantagePoint indicators to turn around. But again, if you're trading the US Canadian pair, guys, you're trading oil. You just don't realize it. So if oil prices are going up, US CAD's going down. Oil prices down, US CAD up. That is the trade here, guys. Some of the other commodities definitely play into that, but oil is the big driver. So to begin the week, where we want to look at things very closely here is right around this 130.63 area. I'm just going to draw that in so everybody can see it. That key VantagePoint 18-day predicted EMA right there. So as long as we're holding below this level, shorts carry a slight edge, but I believe that we will retake that level by the mid part to latter part of next week, again, barring any something off script from the FOMC that could alter that and cause excessive US dollar selling. But again, that's also a negative for the Canadian dollar. Now, as we come into our final two commodity currencies, Aussie US, New Zealand US, we can see once again how the Brexit vote has indirectly also had a huge impact on the Aussie-US pair. So when we look at this, the bulk of the gains on this pair, positive and negative, came during that day, and we've managed to recover, come all the way back up to the Brexit swing high right here, but then we failed again. But again, another nice signal from VantagePoint that had us going long here, but now we seem to be getting a little toppy up here, just above the 77 levels. So 7650 here is a very critical level, and so is this number, the key VantagePoint 18-day predicted EMA, 75.97. Let me just clear that so everybody can see that. 75.97. This is the key VantagePoint 18-day predicted EMA. Longs carry a slight edge why we're above 75.97, but if we start breaking below this key vantage point level here, that is likely going to trigger a move back into that 74.50 area, potentially even the 73. But again, I think the line in the sand here is going to be right around this area here, the vantage point 8-day predicted EMA, which comes in at 76.42, and of course this swing high that I'm identifying from the Brexit vote. You can see that again, it's had a very big, it continues to have a substantial impact on the markets. Despite the fact that Brexit is in the rearview mirror here, it's still affecting this pair. So the market is watching this swing high. The intermarket correlations are giving a pretty good buy signal to get long on this, down around 75. It's a great call right here, but now we have to see if we've got any further follow through here. And leading into the FOMC minutes on Tuesday, Wednesday of next week, I think it's going to be difficult for the Aussie to hold on to those gains. Now, as we come into the New Zealand-US pair, once again here, guys, I'm just simply drawing everybody's attention to this. This is what I do with my own direct clients, that we look at price action here and combine it with intermarket correlation. So when I look at this, once again, we can see that we've basically sold off, then we recovered exactly to this swing high on the day of the Brexit vote, only to turn around and move lower. But once again, we have seen buyers coming off the swing low from the Brexit. So this is where order flow comes into play here. We can see the buyers drove it right back up, but then we failed again at this level. Now we're swinging back up. We had a false break right here, but we're still, the VantagePoint 18-day predicted EMA continues to guide us through this. So 71.57, the key VantagePoint 18-day predicted EMA. I'm going to point it out to everybody right there. But we have a mixed bag here. Now the position of the predicted MACD I really like. The position of the predicted RSI, I would like it back above 60 here to show that I've got some momentum building in this trade. Now, case in point, here is the position of a break of the 60 level of the predicted RSI combined with the VantagePoint triple EMA cross. We can see that led to a fantastic move. But we also had the neural index, the predicted differences, everything coming into play here. We don't have that here, okay? Our strength indicator is below the zero line. Our predicted short, medium, and long-term differences are flattening out right here, and our predicted RSI has broken back below the 60 and moving back towards the 50 level. That's a problem here, guys. So when we look at that, we look for that needle in the haystack to guide us through this, to make sure we're not getting caught in what I would call a potential bull trap up around this 73 area. So remember, your order flow, guys, they're going to come in around these swing highs up here, around that Brexit swing high. For New Zealand US to be very bullish or very bearish, we need to break through either the 73 level or the 69.80. Then we will have a fresh brand new trend. We will get that. We are definitely going to get there, guys, but it's going to be in September. I don't believe that is going to happen in August. Now, the last couple of weeks of August are usually absolutely dead flat. That's just the way it's been here, guys. So I wouldn't expect any huge moves. The only thing that could trigger a big move in the markets is, of course, those FOMC minutes early next week. Make sure you're being mindful of trading around that announcement, because it still will have a substantial impact on our trading.